Welcome to Investing Insights. I'm your host, Ivana Hampton. Market volatility has left its imprint in 2025. Turbulence from tariffs, tech, and more have shaken investors' confidence at times. Many folks look for safety during those down periods. Yet, the U.S. stock market overall has delivered a strong performance. So, who are the leaders and laggards as this year comes closer to wrapping up? And what should you watch with 2026 fast approaching? Joining me is Morningstar Indexes strategist and columnist Dan Lefkovitz, who has examined this year's investment performance. Thanks for being here, Dan.
Oh, it was great to be with you, Ivana.
Many Wall Street forecasters predicted upbeat 2025, and then they adjusted their forecasts as the trade tensions mounted throughout the year. So this year unfolded differently than predicted. What surprised you about investment performance?
Yeah, there were a lot of surprises in 2025, Ivana. If you think about where we were 1 year ago in the aftermath of the U.S. elections, the market had some big reactions to Trump's victory and to the red sweep. U.S. stocks rallied, Europe sank, bonds sold off within the U.S. market. Small caps, cyclicals were the leaders. The dollar appreciated. Crypto did really well. And then, as you say, early in the year, as the full scope and scale of the Trump tariff policy came into clarity, there was a real reset, and we shifted from risk on mode to risk off mode. Greed gave way to fear, and we have recovered. And obviously, trade policy has moderated and gone through some different ups and downs. But if you look at leaders and laggards from investment performance standpoint, and I know we'll talk about those, they look very different to what was expected 1 year ago coming into 2025. A lot of those so-called Trump trades really did not persist.
And market volatility definitely ebbed and flowed in 2025. How volatile was the U.S. stock market compared to recent years?
Yeah, it was a pretty volatile year, more volatile than 2024 and 2023, not as volatile as 2022. If you just look at the number of big market swings on a daily basis, 2022 was just a brutal year when we had those, inflation and then the big interest rate hikes. Going back to that February to early April period, we were flirting with bear market territory. And we had, April 2nd, April 3rd, losses of 5% on both of those days for the Morningstar US Market Index, our broad gauge of equities. Then we had that massive rebound when the tariffs were paused, over 9%. That's a daily move that we haven't seen since 2008. If you would have told us on April 8th or so that we'd be sitting on gains of almost 18%, in the U.S. stock market in early December, that would have been a real surprise. So I think we should be thankful for the gains that we've seen, but definitely a bumpy year.
So what caused the volatility? Let's list it off.
Right. Well, you mentioned trade policy. When the tariffs were announced, that was a big source of volatility. But even going before that, in January of this year, we had the DeepSeek AI launch out of China, which rattled the markets and really called into question that dominant theme that's been powering U.S. equities, not just this year, but in years prior, which is AI. And AI was really a source of volatility throughout the year, both positive and negative catalysts, evaluations, concern around whether we're in an AI bubble or not, earnings announcements, pronouncements from various tech leaders about AI. So as the market kind of wrestled with AI and its future, that was definitely a big source of volatility. I'd say, valuations coming into the year were really stretched. Our equity research team said that valuations looked priced for perfection in the U.S. market overall. And when valuations are stretched, that sort of sets you up for disappointment. And when, we have these bumps and these shifts from risk on to risk off, the highest flyers often fall the furthest. And then, of course, just the usual, the Fed and various economic data releases. This year, of course, we had the big, beautiful bill and the government shutdown, which were also sources of volatility.
During those down periods, where did investors hide or seek safety?
Yeah. Well, bonds did really well, surprisingly well, I think, during that big sell-off that we saw in March and April. The Morningstar U.S. Core Bond Index, which is our broad gauge of the investment grade fixed income universe for U.S. investors, actually held its value as equities were selling off really sharply. So bonds did their jobs, not just from an income perspective, but also as diversifiers, as portfolio stabilizers. I'd also point to within the U.S. equity market, low volatility stocks held up really well during sell-offs. Berkshire Hathaway is one that I would single out as performing well and kind of holding its value, being almost like a totem of the risk-off market vibe.
Let's zoom in on this year's investment leaders and laggards. Which areas are outperforming and which ones are underperforming?
Yeah, I think one of the biggest surprises that we've seen in 2025 has been the outperformance of international stocks relative to US stocks. I mentioned the US market is up big, almost 20%, but Morningstar Global ex-US Equity Index is up even higher. Europe has had a great year. Emerging markets like Korea, Latin America, China have done really well. The depreciation of the US dollar has definitely magnified gains of international stocks relative to U.S. stocks from a U.S. investor perspective. So international is one I would point out. If you look at within the U.S. Equity market, large caps have definitely beaten small. We talked about AI being the dominant theme. AI was really a driver of sector leadership within the U.S. market. So technology stocks and sort of tech adjacent sectors did really well. I'd also mention utilities. The utility sector kind of transformed from a really boring kind of steady Eddie sector to a growth area due to rising power demand from AI.
You researched the performance of investment factors which drive risk and return. What has been the leading factor this year and why?
Yeah, the best performing investment factor in the U.S. equity market in 2025 has been momentum. So just piling into recent winners has been a successful investment strategy. If you had just picked the most successful areas in 2024 and loaded up on them in 2025, you would have ended up really well. Now, at points of the year, momentum sold off. There were some inflection points that we can get into, but momentum has been a winning strategy, not just this year, but in years prior. And I really would credit AI for that.
So leadership did change this year. What caused it?
Yeah. Well, those big volatile periods that we saw, those big sell-offs, we did have some rotations. There were times where momentum suffered some really heavy losses. And I mentioned the low volatility factor benefited from that earlier in the year. There were points in the year, there was a point in the year where stocks were ahead of bonds, of course, but then as stocks recovered, they caught up and surpassed bonds. But even within the stock market, there were periods where small caps had rallies, but they failed to sustain their rallies. And then something I'd mentioned just that's been recent is just in the fourth quarter here, the value stocks have really performed very well. I think maybe as investors have been sensitive to valuations in the AI space as that narrative around AI bubble has taken hold. Value has rallied, and we've seen the healthcare sector really post some nice recent returns after being a major underperformer for most of the year.
Now, Q4 will wrap up in a few weeks, and I should timestamp us. We're recording this Monday, December 8th. What areas should investors watch as we head into 2026?
Yeah, well, I think this question of whether we're in an AI bubble or not will continue to preoccupy the market. I would say investors, regardless of their view, should probably be aware of the exposure that they might have to AI and that theme in their portfolios. If you're just holding a broad U.S. stock market index fund or portfolio, you might have more exposure to AI than you think, just given how concentrated the U.S. market has become in the technology kind of names and AI levered names, how top heavy the market has become. So AI and just thinking beyond AI, making sure you have exposure to value stocks and small caps, which our equity research team thinks are undervalued and hold more upside, I think is important. making sure you have global exposure, which is another way to diversify from AI because global markets have less technology in them. Currency diversification is another big benefit there as well. And then looking to bonds as a source of not just income, but also total return. U.S. core bond index is up roughly 7% this year, which is really nice gains. We've had some interest rate cuts, which have benefited fixed income. But within fixed income, being careful about taking too much credit risk. We've seen some tremors in the credit markets. We've seen some bankruptcies and some defaults and some frauds, which have rattled regional banks. We've seen lots of capital pour into private credit, which is an asset class that has yet to be tested by a credit cycle.
Now, market volatility happened in 2025. What takeaways can we bring with us into 2026?
Yeah. Three things I'd point to, Ivana, as being really important for investors to think about going forward. One, market leadership is changeable. Leaders and laggards are dynamic. We did talk about how momentum has been a really strong factor. On the other hand, we did see the resurgence of international stocks in 2025, showing that, things can change. One of the dominant themes over the past 10, 15 years has been U.S. exceptionalism, but that really reversed in 2025. And there have been historical periods where U.S. investors have benefited from having international exposure. Two, valuation matters. Valuation was a tailwind for international stocks coming into the year. We talked about how valuation was a contributor to volatility this year. And then three, diversification can pay off. If you had exposure to international, if you had bonds in your portfolio, that smoothed your ride in 2025. If you had gold in your portfolio, that benefited you. And especially given uncertainty, questions around AI and valuations going forward, I think diversification is a really sensible strategy going forward.
Dan, thank you for coming to the table to discuss investment performance in 2025 and what we should watch in 2026.
Thanks for having me, Ivana.
Thanks for tuning in to Investing Insights. To wrap up your week, The Morning Filter is bringing back an annual favorite on Monday. Morningstar Inc. investment specialist Susan Jubinski and Morningstar Research Services Chief U.S. Market Strategist Dave Sekera will review his stock hits and misses of 2025. Listen to the episode on Apple Podcasts. Thanks to senior video producer Jake Van Kersen and associate multimedia editor Jessica Bebel. I'm Ivana Hampton, lead multimedia editor, Morningstar. Take care.